I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website, thegoldandoilguy.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Hope you had a great Canada Day.
Did. Excellent. Well, it poured rain, but it was a great family day. Usually we have good weather, but we broke a record low here in the town we're in for the coldest weather this time of year, I think in like 50 or 60 years. It was
Whereabouts is that?
8 degrees, just north of Toronto. And it was 8 degrees, which is unbelievable. It felt like May 2-4 weekend, which is usually cool, but nice.
Ah, yes. I think Vancouver actually had the nicest weather. Vancouver and Regina for Canada Day. Everybody else had miserable weather. We were sunny and 22. Regina, sunny and hot. Anyway, is there anything really hot right now when it comes to selling off shares?
Yeah, it depends what you consider hot. I guess the hot item that everyone wants to unload and sell are tech stocks, which is more or less the XLK, which is the tech sector fund, or the NASDAQ, both of them heavily, NASDAQ's heavily weighted in tech stocks. They just continue to sell off with big volume, big moves to the downside. And considering yesterday was somewhat of a holiday, you'd figure a lot of people would be away, and usually we expect light volume and kind of a dead day, or, light volume typically favors higher prices. We saw strong selling. We saw the tech sector just get hammered over 1% down again, the NASDAQ down over 1%. And, it's just a somebody or groups of people are just really unwinding that whole tech sector. And you got to wonder where that money's getting put to work. It seems like financials are on fire and making a nice run. But it is a little bit of a concern that we're seeing this heavy distribution repeatedly in the tech sector. So it definitely has me a little bit concerned. That being said, the NASDAQ and the tech sector are one more big down day, another 1% or so, and I think we could see a very significant support level hit, a reversal kind of level in the market that could signal the start of the next big rally. And the broad market in general is completely held down by the NASDAQ, by the tech stocks. It's like a giant lead weight, and you're trying to swim across the bay, and it's hanging off your belt with a rope. It's just the markets are actually doing pretty well, like the S&P 500, the Dow, the small cap stocks. They're actually moving up and very bullish, but they're really not pushing to new highs and breaking and running away because of the NASDAQ and the tech stocks just keep pulling it down. So, once the NASDAQ finds a bottom, this market could be off to the races, because we've got we've got all the safe havens selling off. Money is definitely flowing out of the safe havens, whether it's bonds. Utility sector's been beaten up real bad. Gold, silver, miners, they're all under pressure. Money is rotating out of those. And I think people are kind of winding up and getting ready to potentially put some new money to work in equities. I think a lot of people are kind of waiting to see when the NASDAQ is going to put in some type of reversal candle or price pattern that will get them excited to get long again and get it into the market with that fresh money, I think, that's sitting on the side.
Warren Buffett, kind of always interesting to see where he's putting his money. Well, he bought into Bank of America and struggling home capital. So maybe he's bullish on financials right now.
Yeah, exactly. Well, Bank of America stock it had a really nice run in 2016. It's been trading sideways pretty much since December, but it's been building a platform. And if it can break the 26 or 25.90 mark per share, Bank of America could be off to the races for another significant run. We could see it run another 30-40% from where it is. So It's not a bad-looking chart. I'm not a huge fan of Bank of America myself as an individual stock, but the chart is in a strong uptrend. It's taken a big consolidation. So obviously, if Buffett is involved in financials and moving in, he probably sees something coming with all of his insight and connections, and maybe he's kind of loading the boat before something new triggers, and we see the financial sector really explode and take off, because the XLF has been moving, or BAC, Bank of America, has been moving identical to the financial sector. So instead of buying one stock, you could just buy the XLF, and you kind of have a basket of them all and a little more protected. So if BAC takes off, we're probably going to see the XLF explode and run almost, tick for tick. They're almost identical charts.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're talking with Chris Vermeulen. Chris, the price of oil up slightly, and of course, being long weekend in Canada, or at least Vancouver, we saw gasoline prices jump as they always do. And then I'm sure they'll be back down during the week. But apart from that, how are crude prices doing?
Yeah, well, crude prices sold off about a week and a half ago, 2 weeks ago. They bottomed out at a really significant pivot point in the market. It was a significant turning point two other times back in September and again in November. Both times that price level was hit. We saw a very dramatic and strong rally. Crude oil has done that again. It hit that price right to the T, and it's ripped to the upside. And it's had a nice run. The quick explosive move, I think, is more or less done. I think they could still continue to grind a little higher. It closed the last session at $47 per barrel. It might squeeze all the way up to $49 a barrel or so, but it's got a lot of overhead resistance between 47 and 49 that it has to try and get through. And I think we're going to start to see probably the crude oil, these big green bars to the upside, start to slow down and become smaller as sellers start to step in, and people aren't so eager to buy way up here at these prices. And I think crude oil it's had a nice run, and now we're just kind of waiting for it to top out and see if we're going to get another move to the downside, because it is in a downtrend. It's you could argue it's in a bear market. It's dropped over 20% since the highs earlier this year. So there is good potential here that once this rally stalls out, it could be another great shorting opportunity to play an inverse ETF to the downside, which we've already done a couple times this year with these amazing drops in crude oil.
Auto sales are down. Does that indicate that people don't plan to drive, or has everybody bought a car who wanted a car?
Yeah, I'm not sure what that means in general, but it is. I kind of feel as though cars have really flooded the market ever since, several years ago when they started giving employee discounts and $7,000 off a car and, $12,000 off a truck. And I think it definitely spurred a lot of auto sales and tried to keep the wheels turning in the economy, pardon the pun. But I do feel as though most people who need a car, wanted a car, have a car, because they're kind of a dime a dozen now, and there's a billion of them on the market, new or used, and the prices are way down from what they used to be. And with gas prices back down into somewhat of a normal range, it makes it affordable to drive. And I think the auto industry is going to struggle a lot going forward because they did such sharp, heavy discounting, and people aren't really going to want to go back to buy a car at full price, and it's tough. Once you lower prices, it's really hard to start bringing them back up again.
And of course, in Vancouver, Vancouver leads North America in car sharing, and they do everything in the city of Vancouver itself to discourage car use. Parking fees on the street or in parkades are sky high. And now they're looking at road pricing to pay for roads. And we already pay a 17-cent tax per liter on gasoline for transit. So if they want to discourage auto sales, plus Vancouver no longer has any gasoline stations in the downtown core. So like I said, they've done everything to make sure that Mayor Robertson gets his wish that everybody ride a bicycle, because they certainly haven't made it friendly for cars.
Yeah. Well, once you get in those heavy metropolitan areas, you need to charge a premium, a killer premium for gas to cover the expenses to have a gas station downtown. So I can see that, but yeah, it's once you get downtown, everybody's starting to squeeze out the cars. It's hard to get parking. It's hard to get anything. And if you've got a car, man, you pay through the nose to park it, to do anything with it. Just to find a parking spot, let alone even have to pay for one, is hard enough.
Oh, and plus, it's not a free ride for electric cars in Vancouver anymore either. The city plans to start charging pretty hefty fees to use their charging stations because they found people were using the charging stations as parking spots. They just plug in the car and leave it there all day.
Right. Yeah, that makes sense. Yeah, people always have ways of definitely taking advantage of things, opportunities. Jeez.
We'll have more with Chris Vermeulen right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Chris Vermeulen. Chris, the price of gold up slightly as we speak. Silver is down. Is there a growing spread between the gold and silver ratios?
Yeah, well, obviously, silver's been selling off a lot faster pace than what gold has, and it's making lower highs and lower lows, while gold, on the other hand, has recently been making more or less higher highs and higher lows. So one is in an uptrend, gold. The other is in a downtrend, silver. And if you look at gold miners, which typically lead the precious metal physical bullion prices, they have actually just been trading sideways, which is pretty interesting. So the whole precious metal sector is somewhat in no man's land. One's bullish, one's bearish, the other one's going sideways. And I think really what's going on here is we're just letting the market is just kind of playing out. And the way it goes, if the market doesn't shake you out, it will wait you out. And I do feel as though there's a significant bottom in gold and miners, the whole precious metal sector. I think the bottom has been put in. I do feel as though we are in a multi-year basing formation. You could argue the base started actually in late 2013. Here we are 2017, halfway through it, and we're just starting to come up the other side of this basing pattern. And we still might have another year or so to go before potentially gold breaks out and all these metals take off. And so what the market is doing now is it's just going to linger and flounder and chop around in this big basing formation until people give up and they get tired of it and it falls off the radar. And then it'll start creeping up and people won't really hear about it until it breaks out, gold above 1,400 and we see it starting to rocket higher, and that's when everybody will pile on and really spark the next bull market. So the market right now is simply just trying to wait everyone out, get them bored, get them to forget about it. And that's what happens during especially a commodity cycle. This is a massive multi-year commodity cycle and a basing. It's just the norm. You got to expect to kind of go look elsewhere if you want really strong trends and to take advantage of them until this breaks out.
If you're interested in gold or other precious metals, is this a time to use cost averaging, just buy so much every month?
I do. I think it's a great time. I've been cost averaging for the last year and a half or so, and I think it's for a portion of your account. I wouldn't say load the boat and go heavy on precious metals because they could underperform or flounder for years potentially. You never know, especially with commodities. They can be dormant way longer than you could ever anticipate. So I think for sure, if you don't have any gold or you don't have very much gold, silver miners, I think it's a great opportunity every month or every couple months to pick up some shares and slowly accumulate some. You're going to get some at a premium price. You'll pick some back up down at a lower price. And eventually you'll have your 5 or 10% of your portfolio sitting in that safe haven, and eventually one day it'll become into favor and take off. And you should be looking to trim those positions once, it's in a full-blown bull market and there's signs of it potentially coming to an end.
Stephen Poloz, the governor of the Bank of Canada, has just said Canadians have a financial buffer to handle higher interest rates. Do really people have that extra buffer?
I don't know if they do or not. I didn't, from recent stats that I saw, I thought Canadians on average were pretty broke, and they didn't really have much put away for any of that. And real estate prices are on fire, and I'll tell you, when the average mortgage, the biggest one is, it's a 5-year mortgage. Man, when the 5-year mortgage wave comes up, and if the interest rates are a little bit higher, there's going to be a massive squeeze and pinch on people. And everybody always buys a house a little bit outside their budget because a house is always so much nicer when you pay just an extra couple $100,000 for it. And I'll tell you, add interest on an extra few $100,000 when you're already strapped in the first place, people are going to be, having to downsize and sell. It's going to be a real squeeze, I think, in a few years. It's a long cycle waiting for the whole mortgage and interest rates to really kind of kick in to affect the market. And, we're a couple of years out here where I think, it won't take effect for a couple more years, more or less.
Yeah, I wonder how much research he did to find out that Canadians had this extra buffer when other studies say most folks are 2 paychecks away from being on the street.
Well, exactly, and that's what I got out of it. I guess the question is, what group of people did he survey? Did he do the masses, everyone in general, or did he just take a select group from a certain area that maybe they all have the funding cash stashed away for? It all depends on the group of people they surveyed.
Well, I was going to say, sure, he just went around the table there at the Bank of Canada, which is made up of Canada's biggest banks. Everybody here have a little bit of money, stored away so I can charge higher interest rates? You all do?
Oh, yeah.
Yeah.
Oh, yeah, they're all nodding their head. It's
sure.
all overseas. Oh, yeah, it's untouchable. I got tons. I got millions.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen, his website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.